Hey, Tom here, FlipAnythingUSA. I'm here with Russ. He's one of my the students, also a very successful real estate agent and investor on his own right. And he is in Portland, and he's fishing, and he took some time out to hang out and talk. We everybody in the class, is into investing, so we all live it and breathe it. And anyways, thanks for coming on,
Absolutely.
Russ. So I know you're taking some time out of your trip there just to hang out and talk a little bit, and I appreciate that. We were talking the other day about interest rates, and we're going to be talking about that in a minute. So anybody got anything, you can get in the chat, and we'll address any questions you have.
It's the best thing I ever did.
All right. Hey, those of you that are new to the channel, so I've been buying and selling real estate for 41 years now. I kind of share how my rental empire and my flipping transactions that go on over the years. And please hit that subscribe button, hit that like button. If you're new here, you can always dump it later, but I think you'll enjoy what you see. So anyways, Russ, first of all, you got a brokerage. What do you see happening with the agents and inventory? Are the inventories up and that sort of thing?
Hey, Tom. Thanks for having me on again. And I'm seeing price reductions all across the board. We're active in Oregon, Idaho, Washington, and we're seeing, everything from high-end luxury homes to lower-end properties. Everything, the prices are starting to go down. We're getting buyers with, cold feet. They put in an offer. They even spend money on inspections, and then they, decide to back out. And of course, like everyone else is seeing, we're seeing higher interest rates. And typically, buyers that would have bought, now they're holding back. And they're like, some of them would have even sold their home, but since interest rates are 7.5%. They're saying our current interest rates are at 3%. What's the point of relinquishing our current home and switching it for 7.5% interest rate? So everything is slowing down, but at the same time, as an investor, and I work with a group of investors, we're super excited, and I'm sure you are as well. Time like this, we're going to start seeing maybe short sales and more of them. We're going to see more foreclosures, and that will spell that opportunity for us. Who know how to find those deals, how to properly analyze them, and how to take advantage of the market declining. So I see it as a huge opportunity. If you missed 2008, 2009, this could be a great opportunity if you have some cash on the side to get some really good deals.
Yeah, I think it's actually going to be more reminiscent of maybe the the 80s. Which I started in a recession, but of course I was starting, and so I didn't have the ability to take advantage of the things that'll probably come up in the form of some people people falling apart, and you got to go over there and pick up the pieces, and sometimes there's pretty big pieces for everyone. As far as the residential goes, what do you say? I mean, I know you look at commercial as well, but what do you see being stung the most, at least in your particular area? I know residential is probably the mainstay of your brokerage.
So probably I'm seeing the higher-end luxury homes. The prices are really starting to tumble. Anywhere from 50 to 100 to 150,000. Also, some of our builders are starting to cut back. Some investors and developers, they have plans to develop a lot of lots. They're cutting back just because they got hurt back in 2008, and they don't want to experience that. So we are seeing developers pulling back from building new homes, developing new lots.
And when you refer to developers, are you referring to like small developers that maybe have anywhere from 1 to maybe 12 units? Or are you talking about guys that have like 100 homes in their first phase?
I'm talking about those smaller guys. So we don't really work with the really ultra big developers, but the smaller guys, under 12 lots or so, they're definitely pulling back. Because if they make a mistake, that mistake could really hurt them. Maybe the big guys can they have the deep pockets to weather the storm, but not the little guys.
Right.
So
I'm
we're
seeing.
being a little extra cautious, but at the same time, we're also, a lot of our investors are hoarding cash just to take advantage of good deals when they come along. So.
Yeah, unless you've ever seen it really get bad before, some people don't realize how bad it can get. If you were just looking at a 10-year window, you've really never seen any tough times as far as I'm concerned. but they definitely are there. And as far as the commercial end, what about the commercial market?
Commercial market, I'm actually seeing the cap rates increase.
They're asking, really? I mean, what do you mean? No, wait, define that. When you say they're increasing the cap rate in order they're lowering the price to increase the cap rate on a sale, or what are we talking about?
Exactly. So the prices are lower, so the cap rates, you're seeing higher cap rates, where before they were 4, sometimes as low as 3%. I was just scratching my head. How does this make any sense for someone, to run this thing operated? You're basically going negative after everything, and insurance is increasing, property taxes are increasing. Now, all of a sudden, with higher interest rates, we're seeing those cap rates 6, 7, 8%. So prices are starting to come down in commercial as well.
No, I've seen it too. Not as fast as I'd like it. Of course, I'm in an area where there's so many rich people, it's unbelievable. And more coming in because we're getting a lot of the California flight coming in, and we're getting we get people from, any of the tax-heavy states, New York, Washington, they're kind of flooding into the areas that are more taxpayer-friendly. And so I'm not getting that break. I guess on the upside of it is the fact that we're not seeing our values drop. In the high end, I really haven't seen much of it. Inventory's building a little bit, which is going to, of course, precede a drop. But, I'm greedy. I want to see it drop a lot more, at least on the commercial end. On the commercial end, it's a little frustrating. There's a deal here and there. But as far as, we're talking about interest rates. So Russ had wrote me the other day, and he said, hey, check this out. And he threw me an image that was basically of an ad for a 40-year mortgage. And I thought it was funny because I remember being like, I don't know, maybe 20, and I was in real estate already, in the 80s. And I remember seeing, because the interest rates are so high, the only way they can bring the payment down is to either go interest only or, but they had a 50-year mortgage. And I remember 50 years, and I remember thinking when I was 20, I go, I'm going to buy something and it's going to be paid off when I'm older than grandpa. It just didn't make any sense, and still doesn't make any sense, to be quite honest. But, this is the stupidity of the masses. The masses are the asses. I say this all the time. People don't say how much, they say how much a month. And boy, those people are going to be the ones that really get burned, because if their only criteria to buy a house is how much is it a month, and when 99% of their payment is going to interest, and not even 1% going to the principal, then when you set your standards that low, you're sure to meet them. So,
but check this out, Tom. This is huge. For most of my professional career, actually all of it, I've only seen 30-year mortgages. Then you got the 15-year, and it's never gone above 30 years. Yeah. What happens is when you push it above that 30-year mark, say 40 years, who knows, maybe a 50-year will come back again like it was in the 80s. All of a sudden, people can afford more. So, and here's the question. If people can afford more, will this kind of stop the price drops that we're seeing? And will this turn around? I don't know.
Well, here's the risk. And the government always does the stupidest stuff. So if a government will back a mortgage like that, then it probably will help things. But the problem will be is that the banks will make all these mortgages, high-risk mortgages now, where people never, there's never really any delta between what they owe and, what they paid for the property. And so then it just wouldn't take much of a tough time after that for everything to go back to the bank. And when they go back to the bank, they're on the hook for the full, it's just going to be too heavy. That's I always say. I always have a tough time predicting the market because I know that government intervention can just destroy things one way or another. And where I would like them to just let everything crumble and let, investors like Russ and myself and others, let us pick up the pieces. Some people just shouldn't be saved. The save should be they fall and other people build. And then they learn their lesson and then they go on. So, and this is changing the subject a little bit. I see everybody, crying around the country about they can't get any good workers, get any good help. And the people that have worked for me for 20 years in general. And so I've got I'm not hurt by it too much, but I can say anybody new or any contractor that I need that's different than I've used in the past, I mean, it's just tough to get good people. And I don't know where the money's coming from, though. What do you think?
I mean, for us, a lot of the money is coming from California. I mean, a lot of money. Usually folks sell a home over there, they come here, they buy at least 2 homes, 2, sometimes 3 homes, and still have money left over, especially from like the Bay Area.
The Bay Area is the only area that hasn't been affected by, they really haven't had their mortgages drop from the research I was doing here recently. It's like one of the rare markets that, they haven't been bothered. In California, we're talking about.
Yeah. Who knows? I mean, I'm not a Bay Area expert. I've been down there a couple of times, but I didn't really see prices decline too much like the rest of the country. Well, another thing I'm noticing, speaking about, workforce and labor, back when everything was really going, say 8 months ago to a year, some of the workers I would call, they were so busy, they would call me back, 2-3 days later. That's how busy they were. And they're all charging an arm and a leg. And all of a sudden, those same guys that would take them 2-3 days to call me back, they're reaching out to me randomly, like, hey, do you have any work? Hey, do you have any work? Hey, we're looking for work. So I'm getting more and more of those. So for me, that's an indicator, construction slowing down.
Yeah. I mean, it's turning from a, just kind of like we know a buyer's market and a seller's market. It's kind of turning on them. It's not necessarily a contractor's market. And I have the same thing. I got to say, I have had the same thing. I had somebody, I thought they gouged me a little bit on tile, and they worked for me for a long time. And I said, hey, really, I got to spend $2,500 labor for one shower? I go, that's what I can expect. They said, hey, well, those are my prices. And I said, well, I just told them before that, look, I can get a shower done for $1,200. I like you, and you've been doing my stuff. And he still hit me for $2,500 a shower. And so now I'm shopping it, and I'm sure it's going to go down. And I'm going to give him an option because he called me back since. And he's saying, hey, I got guys sitting around. And I said, well, they may sit around a lot if you keep asking too much. So, everybody should, listen, and don't be shy about, listen, I will use the same people forever until I feel like I'm being taken advantage of. And then I just check the market, and that might mean changing gears. And then maybe I'll learn something too. Maybe I'll learn that the trades are shit and that I'm lucky to have the guy I have. But I don't think so. But
So, Tom, I had a question for you. With rising interest rates, what are you doing right now in the foreseeable future? Are you paying off debt? Are you,
no, because no, I don't see any reason to pay off debt. Listen, I think everybody, it's a reaction. Oh my God, I got a jackhammer going. Is that terrible? I really do have a jackhammer going outside. Hang on one sec.
come down and buy up those good deals that are going to be hitting the market, anticipating those good deals at least.
All right. Thanks. Yeah, I literally have a jackhammer going. There's always something going on. Anyways, we got to cut for a bit. Refresh my memory. What did you just say? What did you just ask me about?
Yeah, paying off debt in today's market.
Yeah, no, listen, people get in that mindset, and I'm guilty of it a little bit too. It's like, yeah, you don't want to hunker down. Well, when you want to hunker down, you want to keep your overhead low and all that sort of thing. And so the first thing you think is, maybe I'll just pay off all these little things. But you go look at the interest rates. Those interest rates are cheap. So keep it. Just keep it, because, the interest rates are lower than you're going to get in the future anyways. And so, like I just secured another line of credit. And it's probably my most expensive line of credit. It's 5.25%, and that's before the last hike. And so, I'm keeping, several $1 million around to take advantage of what's next. And I've hoarded some cash too, but that's to take advantage of what's next. I've got some refi stuff that I'm expecting to go through that's based on the lower rate as well, because I locked it in early. But the thing is, there's no reason to pay off any debt if the interest rates are below what you can get today. And it's also important to have cash if things, tough things happen. I would say the average wage the average salary for an engineer in my area is like $300,000 a year. That's a big paycheck, for it didn't used to be that way. I used to think engineers making $100,000 maybe if they're really good. And I'm talking about, double E's and software engineers and stuff. Man, that's all turned around. Those guys have been in big demand, and they're making a lot of money. And so in my area, I'll probably get a soft landing as far as the values won't drop so much for a couple reasons. Everybody makes so much money. And that's kind of similar to the Bay Area, which is like, what do we call that? Like Silicon Valley area. It's close enough. And then in my area, they're calling this place Silicon Hills now. And because we get a lot of that, high tech and, smart engineer folks. But so for me, back to the interest rate, I don't think anybody should pay off anything. I mean, let me put it this way. You get your debts paid off, that's comfortable. But if you have your debts all paid off and you don't have any cash, that's not very comfortable, because other things can compound on top of you, where if you just had the cash, you just make a payment. You just make a payment and buy time, and and then you got the cash to pad you if there's a problem. That's my thoughts on it. But everybody's situation's different. You know what I mean? I don't have a lot of debt, in general. I mean, I have debt, but it's very insignificant to the overall portfolio. So, but I don't know. I mean, how about you? What are you doing?
So I actually started about 8 months to a year. I saw interest rates being really low, so I refinanced some properties, locked in 30-year, fixed mortgage rates at like 2.83%, really cheap, and just any variable loans that I had, with the increasing interest rates right now, I paid them down, and I got those super cheap money waiting to put it to work. So I'm in really good position. Like I was said, the variable loans or rates is what you have to be careful for. So I got rid of that. But then, like you said, if you pay everything off and you don't have any cash, that's a really, really bad position to be in. Yeah. And I got some cash, got fixed the low rates, and I'm looking for those deals daily. So I'm out here fishing, and as soon as I'm done, fishing here, I'll be out fishing back at real estate. Just how I was in the morning, and it's like constantly driving by, looking at homes, always on the MLS, on various other auction websites.
No, it's wonderful. It's I've been busy just kind of taking care of a lot of just managing the real estate right now. I've been tying up some leases and in a very good position. I'm very pleased. But the next thing is, and I've been watching the market. Actually, I got to look at a couple of things. I put an offer on something. It looks like I didn't get it. Somebody else beat me out of it, but which does happen. Actually, Liam wrote a question. He says, "What do you guys pay to an attorney for closing a single-family house?" Not much. I mean, if you're talking about the title fees, Liam, I mean, what do you figure the title is right now? Title costs are
like $1,500.
Yeah, I mean,
$1,500 on the complexity.
Yeah, but the closing fees are usually less than $500. I mean, both sides split it. It's maybe $225 a piece on average, wouldn't you say?
If you get the title insurance, it might be a little bit more.
Oh no, I'm not counting insurance. Yeah, I'm just talking about closing fees.
Yeah, I mean, without the insurance, I just do it myself. It costs me like the recording fee, $80 or $90. I just record it myself.
Sure.
You can do it yourself, and that's it. I mean, if you don't know how to do that, you want an attorney to help you. I mean, I don't know. I wouldn't pay more than $500 probably.
Yeah, no, I mean, I'm actually such long-term friends with my, one of my main title offices. I'm just happy to throw the business his way. I don't even watch it very much. He's been a good good referral too in the past. I'm trying to grab some questions here too. Chad wrote, FHA loan limits increasing so much really drove up values in my area. Also, jumbo and conventional limits are insane. Yeah, you have. Hey, tell me this. I don't even know what the banks are paying. I'm not much of a saver, but what are the banks paying on interest right now? Do you have an idea? Does anybody know what you can get on a bank account? I'm sure it's well over 1% now.
So I stress out when I have money in the bank.
I know, I'm with you.
I stress. So as soon as I get money in the bank, I try to reinvest it, as soon as possible, so that money is working for me.
Well, and see, that's where that reflex comes in with you of saying, ooh, because you're saying you got a little bit of money right now. You start thinking, well, should I pay off this stuff? But because your comfort level isn't in the cash, it's knowing that the cash is working for you. And I mean, we're all afflicted the same way that way, I think, and it's a good thing. Hey, Jermon. Yeah. So anybody got anything else? Any other questions out there on the FHA loans? I don't know much about that stuff. FHA loans used to be assumable. Well, one of the first properties I bought by myself, the first several houses I bought, I had to have a partner, and I kept splitting the money with him. And then I landed a good deal on one, and it was a FHA loan, which meant I could assume it. And back when they used to have everything was just assumable, and that was a wonderful thing. But they got rid of that. Everything's got an alienation clause on it or due on sale clause. Liam's talking about, I don't know, Liam, what are you paying? I mean, your attorneys, I already know you pay way too much on your attorney's fees, but and like I say, it's insignificant. It's been insignificant. All the closing costs, title policies. It seems like that usually runs about, if I was going to put it in a percentage-wise, maybe.
There is a safety net to using a title policy or a title company. I once had a deal where I closed to a title company, and then like 2 weeks later, the city reaches out to me and says, hey, there's a lien on the property. You owe us, I think it was over 20 grand. And for me, that was a shocker. Especially when I bought the property for like 160 grand.
And you're saying you didn't have title insurance either now?
No. At that time, I did have title insurance, so I just reached out to the title company, thinking they will take care of it. But they're like, "Hey, this is your fault. You have to, deal with it." I'm like, "What are you talking about?" I got my attorney involved. We just wrote him a simple letter to the owner somewhere in, I think it was California, and a couple of weeks later. I get a gold letter. It had like a gold little stamp on it. And they said, Russ, we sincerely apologize. This is our mistake. We'll take care of it. So, it does pay to have a title policy.
No, that was the title company. Okay, yeah.
Eventually, they get out the whole lien amount. But sometimes when you want to save some money and record it yourself, at the county, without using a title company, you can end up missing a lien. Then that can cost you 20, 30, 50 grand. Yeah,
no, I tell everybody, don't buy anything without a title insurance policy. In fact, I'm changing the Google Earth behind me right now just to show you guys. So look, this is the first property I ever bought. This when I was 19 years old. I bought this property, and also had a good lesson on title insurance. So this is a 6,000 square foot building, or 5,900 square foot building. It was metal building in the back, concrete, stucco frame in the front. And that was the first property I bought when I was 19. And I got that owner financed, and there was 5 trust deeds that were wrapped in an all-inclusive trust deed. And so what you guys call a wraparound, or they used to call a wraparound, or a AITD. And so when after I didn't have any credit when I bought it, but by the time I was 23, I had actually made, several $100,000, and I was actually doing pretty well. And so I refinanced this thing because I was paying back then, I was paying 10% interest on that loan. Well, the title company, and I don't want to say, maybe it was Chicago Title. Anyways, I get a title policy done, everything's done. I got it refied through the local bank. And then about 3 weeks later, somebody called me and said, "Hey, Tom, you want to sell your building?" I go, "No." And he goes, "Well, you're in foreclosure." I go, "What?" He goes, "Yeah, you're in foreclosure." I go, "No, I'm not." He goes, "Yeah, it's in the paper." And I go, "Shit." And I open up and look in the paper, and sure enough, I'm in foreclosure on my building that I just refied and just paid everybody off. Well, so I thought. And so I dig into it, and I come to find out that of the 5 trustees that were owed inside that all-inclusive trustee, one guy got overpaid $17,000, and another guy that was owed $17,000 didn't get anything. And so he was the one that was foreclosing on me. And I'll never forget getting a hold of the guy that got overpaid. I said, "Hey, man, you need to give that money back." You know, I was young and stupid. And he goes, "No, I don't." And I go, "Yeah, you do." I said, "They're going to foreclose me." He goes, "You need to take up the title company." He goes, "I'm not giving the money back." And so so I got a hold of the title company, and the title company, like your experience, they weren't very helpful at first. And so then I just wrote a letter, and I wrote them a letter, and then literally a letter because there was no email, but I CC'd on the bottom there that it was also going to my lawyer, and basically just made it into a bigger deal than it probably even was. Anyways, they got it, and that very day they sent a courier out, paid that guy off with a cashier's check, and just cleared it for me. So they do it, but like I say, the very first property I ever had, I had to file a claim against the title company, and they covered it. And it was it was like pulling teeth, but they did do it in the end. So, but what else we got here? Yeah, but anyways, man. We'll see what happens, I guess. I don't know where this thing's headed exactly, but I know that you and myself and a lot of people that we know inside the class, everybody's sitting on some money. Also, Liam just sent me something. Liam, he's got himself. Did you get that thing in, Liam? Liam had one on the line. I think Liam's got one signed. Did you get it signed, Liam? He's got one he just got on that he thinks he's going to make a pretty good chunk on.
Nice.
I'm waiting to hear back from him, but anyways, maybe we'll hear about it tomorrow in tomorrow's meeting. Well, anyways, I guess I can let you go if you want, Russ. You can enjoy the river, and is that what you're on the river actually?
I'm actually on the river, and the only reason I could be out here in the middle of the day while the rest of people are working is because I have real estate. Real estate is the ultimate pathway to freedom.
Yeah.
Luckily I was blessed enough to discover early on in my life. But if you want true freedom, get that real estate, get knowledge, get real estate, and you'll have time to go fishing.
Yeah.
And do whatever else you want.
Yeah, and you reminded me to plug the book. Yeah. Yeah, like Russ says, it's if you don't have my book, get my book. Wake Up and Smell the Real Estate. It's been a bestseller on Amazon, Audible, and Kindle. It's kind of what's connected me with so many people like Russ and others now. And there's just nothing like it. There's no just try to name one other asset that the bank will loan you money on for more than 10 years. There's almost nothing. I can't even think of it. It's maybe one or two rare pieces of machinery. But in general, only the bank will loan you money and loan you 90% of value on a piece of real estate. They won't do that on anything else because everything else depreciates and goes down in value. Real estate is the only thing that has a historical success rate of just continually going up, forever. And so anyways, there's... Like I said, Russ is young and he's, sitting on the river, and I've been, I don't feel like I've hardly worked a day in my life, in the 40 years that I've been doing this stuff, and it's mostly because I love what I do, and that's the saying. They say, if you love what you do, you never work a day in your life, and that really has been my life. It feels like, when I have a piece of property, I'm not nervous that, am I going to make money? I'm nervous that it's not going to close. I'm nervous that I'm not going to make money if it doesn't go through. And that's really the power of buying right. If you buy right, you'll never have a problem. But anyways, well, yeah, enjoy the fishing, and like I say, here he is, a young dad, and get to spend time with his kids and enjoy life to the full extent. And you got that freedom, and that's the other thing. If you got a job that it gives you some freedom. If you have control over your schedule, that's the next best thing to being self-employed or anything else is or from being completely free, is if you have that flexibility in your schedule, you can jump on things and take advantage of things. You can leave in the middle of the day, early in the morning. You know what I mean? You don't have some boss over your head saying, hey, you can't go, or you're fired. In other words, if you have that flexibility right now, you are in a very, very good position to make money that other people don't have. So be sure to get the book and start considering real estate because there really is no other, there's just nothing like it. Actually, we got somebody else. You want to hang out a little longer?
Sure.
Okay. Snunez says, hello, Tom. First time joining your live meetings and received and reading your book now. Okay, good. Glad to have you here. Liam wrote, he doesn't have it signed, but accepted. Should have contract tonight. Good. We didn't jinx anything for you. But we always play very cryptic on our deals here. You listen, loose lips sink ships. You want to be very, very cryptic until you have something signed and you have full rights to it. And even then, I just soon not share anything until I've actually closed it many times, unless it's like this, very cryptic. But
I learned my lesson the tough way, Tom. When I was a younger investor just starting off, I was probably like 21 at the time. Yeah, I found this property. It kind of had like a steep slope going up to it, but it was a good deal. And I knew it was a good deal. I reached out to a local investor of mine. I'm like, hey, what do you think of this? And I kind of trusted the guy. What do you think? It looks like a good deal, but then there's that slope. He's like, oh, that's a horrible property. Don't even buy it. It has that slope. It's terrible. Don't buy it. I'm like, you know what? He's probably right, So I put it off, and then a couple of days later, it's pending, and he's the one who bought it.
Oh, yeah.
Yeah, so when I was young, I learned my lesson. That's it. Keep it to yourself, and my gut feeling was right. It was a good deal, but luckily there's other good deals that followed. But
yeah. Unfortunately, sometimes you just get a really good lesson.
Oh yeah,
yeah.
A lot of lessons. But hey, if you get a mentor, you can avoid a lot of the mistakes.
Yeah, 100%.
So,
yeah. Like I said, there's been people have showed me things, and when they saw my eyes go really big, they go, "Oh, I just told this to the wrong person." And yeah, they did, because they opened my eyes up to something that I wasn't aware of at the moment. And that's really how you need to be out there, everybody watching. Listen, you just got to be all ears. You got to need to know what's important. And that's why I say, you get the book and, or if you can get in the mentorship, if you're not in my mentorship or, you should certainly have a look at it. And I'll take you over there real quick here, but FlipAnythingUSA. And we got a fantastic group. In fact, my webmaster was supposed to update the page with more, all these different people that are in the class now that have actually made, some really, really big money. Millions. There's a lot of them. And I don't know anybody that has a more successful group. And, Russ is in this group and he's part of what makes it an asset. We just got really, really good people that are interested in making money, and everybody's on the same side as each other because we're not competing with each other. At least it hasn't happened yet. But it is it's a real thing. It's a real thing. And in fact, the guy you see off my left shoulder here, this is Kai. I just interviewed him the other day, and he's a young man, 30 years old, and he's got quite a few pieces of real estate now, and he's made a couple $100,000. It just doesn't get any better than that. In the beginning, and then after that, it just rolls and rolls. But let's see, anybody else got anything? Well, hey, it's Friday night. I think we can call it quits here. Russ, are you going to be in the meeting tomorrow?
Yeah, I should be.
All right.
God willing, if we all survive till tomorrow, I'll be there.
Yeah. It's funny. We were talking the other day, and just real quick, and you wonder why the government would have these $1 trillion deficits and continue to make things. This is why I say you can never count on the government to do anything right. They say, oh, the government can't do that. Oh, they won't raise rates for this reason. They never do anything that makes sense. It's very self-serving at the top. Anything they do is for themselves. But I was theorizing with Russ here. I said, well, maybe they know something. Maybe they know that there's like a meteor heading toward the Earth, and that everything is going to be gone and wiped out in 30 years from now, and that's why they don't mind just destroying the future generations with debt, because they know they're not going to be here. I don't know, but I that would say only reason I could understand them allowing the kind of irresponsible spending that goes on regularly, and that is sinking our grandchildren and our kids, on and on. So I don't know. But you got anything you want to add to that? Any rant?
I mean, when you see stuff like that, you gotta, do what you can to look out for your family, look out for your community. And one way is, for me, is through real estate. You could provide jobs for people. You can increase living standards for folks. You can provide a life for your kids that's above and beyond whatever you had yourself. Especially me, what I had growing up. So real estate, changes lives and to the better. But in order to get there, you got to get knowledge. You need some help if read the book, buy the book. And real estate is a powerful tool, not just for yourself, but for your family. It could be for your family and your community.
Yeah, I mean, in the worst case, even, like I've got some people that they're teaching their kids, their adult children are starting to pick up. They bought them a copy. They bought him a copy of the book. And I got one guy that he's like, he goes, Tom, he goes, you ain't gonna believe it. He goes, my kids are competing with me now. He goes, we're fighting over the same deals, because they're in the same area. But what a wonderful problem. If you're gonna have a competitor or have somebody take a deal away from you, may as well be your kid. Because, it's just like I say, you're teaching them to fish, and there's just nothing better than that. I got 4 kids, and I originally wrote the book as kind of a step-by-step basis to help my kids, and they are just now starting to get around to it. My daughters are getting their first houses this month. They're both houses that I bought at a very good deal, and I'm passing it on. And, but that's the kind of thing you can do. And like I say, guess what? Even if they're not interested in real estate, you got money. You got money. And money, you guys know we all have helped people one way or another how we can. And and we've been in positions where maybe we couldn't help people that we wish we could. And you can turn all that around. Your only hedge against a badly, poorly run country, which I think is ours, is terribly run, is make money. You got to make money. If you can make money, you can kind of, you can fix a lot of problems, for yourself and your friends anyways. But, well, hey, thanks again, Russ, for coming in. It's always a pleasure. And I'll torture everybody with the rap real quick, and then we'll call it a day. So, hey, thanks for watching, everybody, and we'll see everybody sometime soon.
Stop and listen. Time is on a mission to eliminate all the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The mentorship and flip anything USA. Go.